Ladies and gentlemen of the crypto space, we are live Friday, October 2nd, 11:29 a.m. I beat my goal. We're 1 minute to the punch. Let's do this. Today's episode, as always, is sponsored by Change Angel, non-custodial swap exchange. Do not keep your assets on a centralized exchange. That's just something we should all know by now. Given how hot DeFi has been, the vast majority of trading doesn't even need to be done on a centralized exchange. I mean, clearly there's assets you're going to want to get, you're going to have to get on a centralized exchange. We've done that with a lot of Polkadot, a lot of Cosmos stuff lately, but anything Ethereum related, get through DeFi, get through a non-custodial exchange. Stop putting your coins on centralized exchanges. That's the name of the game, and that's what I like to promote, and that's why Change Angel is a good partner. I love it. Today's topic of interest is yield. We're going to talk about particularly curve, but this plays into a very much larger narrative that I like to talk about often. I like to talk about yield. I like to talk about recurring revenue streams. I like to talk about uh, tapping into trading fees and platforms that are really generating huge amounts of revenue, and they're sharing that revenue now with governance participators, and that's exactly what's playing out. And that's what's so incredible because this is not what banks do. Do you think when you deposit your money into a bank account, they're sharing the profits of their mortgage interest with you? Heck no. Eh, Heck no. Do I even have to joke about it? It's a horrible joke. Can you imagine getting part of mortgage interest payments because you deposited money into the bank? All right. All right. So that's the whole point of today's topic. Let me find let me pop it over to the main screen and let's find today a tweet that I did that was one of my favorite tweets I think I've ever done. I want to find it. I want to find it. Where is it? Come on. So this is what I think about Curve. To stop looking at CRV. What's pertinent is veCRV, which is exactly what the title of today's stream more or less is. But I want to talk about. I want to start. Where did I write? Where did I write it? I think I wrote it more recently. The point, if I can't find it in 2 seconds, I will paraphrase what I wrote. Oh, here. If you have a revenue share in DeFi interop, AMM, or lending and borrowing platforms, the odds are in your favor that one of the assets will be one of the best investments in history. Thousands, not millions of persons understand and participate in these systems. What does this mean, ladies and gentlemen? This means you have a capacity to get the revenue share of platforms that could potentially be dealing with billions upon billions of dollars worth of trading fees per day or transactions per day, reaping trading free rewards for governance participators. And we're going to talk about Curve. Um, Aave is about to do their token swap from Lend to the Aave token today. I think at 10 o'clock tonight Eastern time. Um, we could look that up. But the point being is a token swap, and there's a staking component to the new platform. And yeah, that's huge. Now, where I'm a little disappointed is Uniswap. I don't see any revenue sharing component because clearly they're generating 0.3% transaction fees, which is many more millions of dollars pretty much per day, as compared to Curve, which is 0.04% transaction fees. But this asset has been totally obliterated. This is an absolutely horrid chart. This is non-touchable from an investment perspective, at least from a technical perspective. Clearly, the fundamentals, there's a great deal of potential, especially that there's a DAO, and that is adaptable. DAOs allow the structure of the platform to change and be modified. So they really need some significant modification, albeit the chart doesn't tell the whole story. And that's exactly why I'm looking at Curve substantially different. And now clearly the price has been destroyed. This is horrible price action on the Curve asset. So anyone who bought Curve, I don't know why you would have bought Curve. Don't buy Curve. You got to earn it. You earn it by participating in the platform. Um, Albeit very hypocritical. I bought Curve. But I have. If you're going to buy it, you understand that it's not. You're not looking for a return on your CRV. If this is and this is the whole point. What I want to get into. Let's check it out. So this is the Dow and information. Resources. That's curve.fi. All right. So the Curve token offers a person a capacity to take part in governance. And you get a couple of things out of governance. You get a boost up to 2.5 returns on the liquidity provided. And what is the boost? Check it out. So current returns are actually incredibly lucrative. 27%, 37%. So you could get some massive returns out of these pools, which is absolutely incredible. But I see no reason to hold on to the CRV token specifically, especially considering the price action that it is experiencing. But what's pertinent is this. If you take your curve and you go to use curve at the top to read more, but if you take your curve, this is basically what the use curve says, and you go to locker and well, it shows it a little different because I already have substantial amount locked. But you're able to lock for a period of time, basically 1, 2, 3, 4 years. And if you lock for 4 years, every CRV you lock, you get one veCRV. And what's pertinent about a veCRV is that you are entitled to 50% of trading fees for the large pools. See, one CRV locked for 4 years equals one veCRV. So that is a nice game theory choice there. That is an incentive, a huge incentive, a 400% more effective incentive to drive the supply disruption of Curve. So it's clearly not it's not enough to boost the Curve price because if the trading fees went 10x, if the volume went 10x, that would very much incentivize more persons to buy Curve and lock it for a longer period of time, longer and longer periods of time. Now, it's incredible. Excuse me. I mean, folks on Twitter especially, they are only literally talking about the Curve price. And I don't see much dialogue or rhetoric surrounding the game theory and the tokenomics of the platform, of the DAO, of veCRV. So as pertinent as if you put in $10,000 worth of Curve and you lock it for 4 years, you're going to get $8,800 per year. And every time you redeem CRV that was revenue, you will be able to lock it immediately. So you're able to get the one-to-one relationship between veCRV and CRV, which entitles you to a portion of the entire platform's trading fees. Now, check this out, and this is what's most exciting about Curve. The platform has $1.5 billion locked and is doing $95 million a day in trading fees. So this is not to be underestimated. And this goes back to what I said. If you have a revenue share in a DeFi interop, AMM, or lending and borrowing platform, it may be the best investment in history, ladies and gentlemen. Now, clearly that's a very speculative statement, but you got to remember, a lot of people that are looking at these numbers are not thinking beyond today. Uh, it's not about speculating and not about hope. Investing is a lot about foreshadows and not what ifs. We're talking with more certainty here. We're talking about odds. The odds are it is more likely than less likely that this daily volume is a fraction of what it will be in the years to come. We're talking about this. This is what I see. We have to go to the DEX tracker. So, 4 AMMs There's two that stand out. Now, what does that mean? Well, let's let these graphics load and I'll show you. So clearly, on the monthly DEX, there's two. You got Uniswap and you got Curve. What does that mean? That's called a duopoly. Now, we see this in society all the time. We have a dominant political party, and then we have, the runner up. We have two-team sports. We have two-team tennis. We have everything is in pairs, left, right, up, down, A, B, choices. So monopolies, there's rarely ever a single monopoly because that's the way that human nature, human mind thinks in terms of balance and choice. So if there's not one, there must be another. So a duopoly is a very common psychologically. And this is very meaningful, something that I'm seeing. This means very much so that these are two entrenched entities. They've already carved out a piece of the future. Um, this is a foreshadow of things to come. If these boys are entrenched, if these boys are a duopoly, that means they will continue to be the leaders in the space. Uniswap is the leader in ERC20 issuance. Somebody, company, anything wants to, like, what ICOs used to be in 2017, but you had to get on a centralized exchange to launch. But now that's completely open. Uniswap has completely disrupted centralized exchanges down to their core offering. The core offering historically of centralized exchanges was the launch of an asset, was really like an IPO, an ICO. But now you could do it with zero resistance. Zero resistance whatsoever. You could launch a company, a project, and have access to countless millions of dollars. Countless millions. The daily volume is astounding on Uniswap. Is that 15? No, that's 15, 15, 15 billion, wow, $15 billion they did last month. Absolutely incredible. So Curve did 5 billion. Oh, that is something not to underestimate. That is an absolutely astronomical number for basically the fact that all this started this year. This is a year. This is all a test. This is all a foreshadow. If Curve's volume goes 10x and you have a small position in the Dow, in veCRV, and you are earning $1,000 a year, and then you go to $10,000 a year, and then all of a sudden, crypto is a good part of the global financial system in 5 to 10 years, doing $10 trillion a year. And this is a duopoly. They maintain leadership. That's the type of bet I want. If I could turn $1,000 into $5,000 a year, $10,000 a year. So me, clearly, I have about 13,000 in there. If I could turn $13,000 into a year into $130,000 a year into $1.3 million a year in 5 to 10 years' time, to me, that is a well-positioned bet. My bet is that in the coming years, this 13 grand will return to me over $100,000 a year. That's the bet. Now, whatever happens, happens, and that's clearly, it's kind of a bit of a binary bet. Hi, guys. We got Pellets, RR in the house. Always a pleasure. I try my best. Stop. My man, Barry, smash the likes. Thank you, people. Thank you. Pellets, so with how much money is worth doing something like that if you have zero? Okay, so this is up to you. So interesting, and I can't say anything. Everyone has to do proper position sizing and portfolio balance based on the amount of money and free capital and amount of money I've allocated to investing in preparation for the future. I was comfortable putting in this. Bear in mind, this amount of money is a small portion of the monopoly money that I won betting over the last 4 months in the DeFi space, which was absolutely insane. And it ended probably about 3 weeks ago now. It was alt season. It was alt season for the last 3-4 months. And it was crazy, boys and girls. Nobody really talks about it. I don't really see it talked about on YouTube as much as it really should be. But that was a crazy alt season. When you see 20, 30, 40, 50% gains on assets day in, day out, the leaderboard on CoinGecko, that shit was fire. Absolutely incredible. Genuinely, always a pleasure. All right, so I love the concept of revenue sharing. The fact that I have this opportunity is incredible, and don't hate necessarily on the curve price. Obviously, if you lost a lot of money, that's very painful, and I understand and I feel. I was in this position very much in 2017, where I turned maybe 20 grand into like 8 grand. And that is the nature of a learning experience. I guarantee you, pretty much in 4 years, the odds are you're going to have between now and 4 years from now, the odds are you're going to have some serious irrational exuberance again. And that's what you just had over the last 4 months. This happened in 2017. This happened in 2020. And there is more likely that it is more likely than less likely that it will happen again. The question isn't if, the question is when. So when you start seeing CoinGecko, so this is your learning experience for whenever it happens again. It will happen again. You go to CoinGecko, you go to the 24-hour chart, you filter it by 24 hours, if it ever works. And when you see this all the way up and down, 20%, 30%, 40%, 50%, the whole thing for a week straight. Take the top 20 assets and watch them for another week. Study them. Because there was a time when Bancor and Kyber and even Ren and Loop Ring and man, what else was I can't even remember what was killing it for me because it was everything. I mean, synthetics, man. I got in synthetics at 70 cents and I was late. I was late. And Lend. Lend was pennies. Lend was 7 cents. There was even less. I'm pretty sure it was even less. But the point is, you now know what to look for to know when to start doing what you should have done about 4 months ago, which is to get in on stuff that's going up a couple 100%. And that's how you create the monopoly money, and that's how you're able to make allocations like that. Obviously, you want Celsius, you want BlockFi, you want to lock in some stable returns. So your goal here, everyone listening, your goal is to max out your 6% limits on BlockFi and Celsius. BlockFi has a 2.5 Bitcoin limit. They'll give you 6% and 6 and change percent. And Celsius has a 5 Bitcoin limit where they'll give you 6 and change percent. Because clearly keeping that money in a bank account makes no sense. Albeit, we're for some serious unknowns with regard to the financial system. And every once in a while, I ping some people that are way smarter than me. And that's Raul in this instance. So I pinged Raul. And what does this mean for crypto? They talk about it a lot on Real Vision. And that's why I like to go there. I think if there's risk off of equities, we're going to have some serious pain in everything other than the dollar, and that's exactly what Brent and Raul think with regard to the deflationary implosion of the global financial system, which would be all value basically flows into the dollar out of emotions. The emotions will drive it. Fear and desire to protect the people's value. That could potentially happen. So, it's absolutely fascinating what has happened over the last couple of weeks. And we clearly see a change in the sentiment of what's going on in the crypto space. Not only just like the price action and people on Twitter, but I see it in my stream. I've been doing this stream for over 2 months, over almost 3 months now. And there's much less interest. But that's just the wrong approach, guys. This is the type of thing that changes your life. This is portfolio management, investment strategy, and if you think just getting a paycheck at the end of the week is going to do anything, I feel bad. I feel bad because that's not just in for a rude awakening. It's scary, guys. You need to take your money and not put it in a bank account. The only money that belongs in a bank account really is stuff to pay bills. Otherwise, you need to have yield. You need to get a return on your money because money in a bank account is just getting destroyed. Look at this. Look at this. You're losing over 10% on average. You can look. This isn't even 5-year average. So here's your 5-year average. But the first half of 2020, second half of 2020 might even be more. Look at the 13%. You have 100 grand in a bank account in LA. You have $87,000 next year. Come on, guys. Come on. I mean, listen. Even if an asset that you have gets hammered, 13%. This is an auto lose. Auto lose. I have no interest in auto losing. Do you realize even if you put your money in Bitcoin and you're getting 6% from Celsius, you're still, unless Bitcoin appreciates, which the odds are it will, you're losing 13. Oh my God. The value loss because of that's measured here, the true cost of living. This is the most interesting evaluation of inflation that I could turn to right now. The Chapwood Index. This is well done, ladies and gentlemen. About the index. Here, Chapwood Index items. These are the real cost of assets. Potatoes, brooms, sails, charcoal, iPhones. Come on, this is everything. Whoever, this is well done. This is so well done. And, you know, just don't take it lightly. Don't be complacent. Don't just let days go by. And I'd be angry. I'm angry. I'm frustrated. Frustrated that the government forces me to have to take such responsibility, to be so aggressive with my financial strategy. It takes effort. And it's frustrating. Very frustrating. Wish it was easier. But it's not because of what they've done, what they've built. What they built is this. And there's headlines in the market and the media. What a hot mess that we live in right now. All right. So the point of the show today, as I said, was yield and taking part in these yield-bearing platforms that are producing yield likely from not necessarily from inflation. You want to avoid or minimize your yield that's derived from inflation. Because that means the underlying asset is going to be depreciating as you're getting yield derived from the inflation. There'll be more supply, albeit that brings up complexity and not uncertainty, but sophistication. And this is kind of where Curve Dow is with regard to their game theory. And that's like synthetics. Synthetics might be one of the most interesting yield-bearing assets because synthetics is inflationary. Let's check this out. I want to show you this. You guys are going to kick out of this. Let's find synthetics. Damn. Still 650. Check this out. Check this out. So synthetics is an inflationary asset. But what happens when 75.22% of it are locked? Why are they locked? They're locked because you're able to participate in SUSD mint process using L2. Well, this is what's coming. And there's no gas involved in this. This is the coolest thing I've ever seen. So you're able to lock your assets and mint SUSD, which entitles you to SNX and SUSD rewards. What does that mean? That means you're getting yield, substantial yield, from an inflationary source, but, and this is the game theory, the amount of supply that's locked is overwhelmingly accounting for the inflation, which is fascinating. You can't, maybe this is possible at the dollar level. I don't know, but this is what these programmers and geeks have come up with in the DeFi and the crypto space is a way to have an inflationary asset that has an incredible deflationary pressure. I mean, the deflationary pressure on this is absolutely astounding. To the point where the price has gone from 70 cents before back in Back when I got it, probably March, April, to $4.14. I think it was high as $8. 50% rip. Let's take a look at synthetics. I absolutely love this asset. Oh, I don't have synthetics up? No fair. Let's pull it up. I got Ren. So Ren might be one of the most incredible ways to participate in volume-based revenue. So as the volume on the Ren platform goes up, the revenue for a dark node goes up. 0.1% mint, 0.1% burn, transaction fees. There's such incredible potential in the next couple of years. Can you imagine if the daily volume goes 10x? And instead of $10 a day, you're producing $100 a day, $3,000 a month per dark node. Now you're seeing, the light. Now you're starting to see how you replace your job, how you replace your income, where money makes money and value produces value, value produces yield. You can no longer do this with the legacy financial system. You can't do shit because bonds are useless. They literally, do you see this? Do you guys see what happened in March? This is what happened in March. This is probably the best, as Raul would say, this is probably the rest of representation of what happened in March. This is all the money that flew into bonds, that flowed into bonds. And this is because they were exiting. This is the traditional finance way to exit the system. For us new folks, for us millennials, us kids, it's Bitcoin and crypto. We don't I don't care about the stock market. In fact, I hate it. I hate dollars. I hate the notion of it. The thought of it is frustrating and angers me. But this is how the traditional finance folks exit. And so much it has driven the price, the yield down to basically zero. And the reason the yield is going down is because the face value, the cost of the instrument has gone up. There's an inverse relationship between yield and the asset cost. So this isn't accounting for inflation. If I bought a 1.47% 30-year treasury and the Chapwood Index says I'm losing 12% per year, that means I'm losing 10% of my bond's value per year because it's not keeping up with the dollar depreciation. So basically, for a retail investor, there is no way in the traditional finance world to not get fucked by the U.S. government and the Federal Reserve and the Treasury's debasement of the currency. Meaning, if you do nothing, there is almost a certainty that you will lose. And whether you take that as you will lose financially or just lose as in like a game, you're going to lose. And that's scary. And this is what I think about all day, and this is why I talk on the stream, and this is why I show you all this shit, guys, because I have no fucking interest in losing. It's time to win. It's time to make choices, but it's time to make good choices. It's not time to go on Uniswap and start betting on whatever garbage these kids on Twitter are throwing around. I mean, there's such garbage that's thrown around. I don't even know where to look for it personally. But what I found is some incredible assets that we've talked about. And we've talked about strategy and ways to structure a portfolio and manage your risk. And I tell you all the time, guys, that the vast majority of my holdings is risk off. The vast majority of my holdings is Bitcoin. But you also have to have growth. So you have to have a bit risk on. But how do you structure that? How do you contemplate the position sizing? You know, you have to take calculated risk and you have to protect your damn gains. And we're not in alt season right now, which means I'm not buying and selling. Alt season, I was literally I was buying and selling. I think I racked up like $7,000 worth of Ethereum fees over the last couple months. Absolutely incredible. I was in, out, moving, adjusting, trying to maximize my gains and protect my gains. And then 3 weeks ago, there was a Thursday, it was a big risk-off event, and I was so happy I did what I said I needed to do this time in 2017, which was sell on the way up. Sold on the way up, and I was able to protect a huge amount of gains in Bitcoin. I mean, listen, it was a 30% loss. So back in 2017, it was probably like an 80%. It was risk off. It's about an 80% loss, but this year, a 30%. I went from about 500% gains to about 400% gains, maybe 600% gains to 400% gains. 200% in the blink of an eye. And that is why you sell when the time is good. That is why you sell when you're on the way up, ladies and gentlemen. But we're not in that position right now. We are not in all seasons. So this is why we are talking about yield and how to balance the portfolio to generate yield. Because even if we're in all season, that's temporary. And our goal isn't to make money by trading. That's how you get wins. And I don't want to gamble. I don't want wins. I want to sit back on a lounge chair, getting 8%, making $250,000 a year off 8%, which is relatively safe. That's what I want. That's my goal. And that's what I'm trying to share with everyone on the stream on how to get to. Because that's where I want to get to. All right. If you haven't bought synthetics since now, when would you enter? Here, let's take a look real quick. Let's take a look at synthetics, and I'm going to jump off the stream. I got to get to work. So synthetics is cool. Make sure you lock it. This is a massive symmetric triangle. Um, it's not a horrible entry now, but there's absolutely no reason this thing can't get to the bottom of the sim triangle. If you want to if you're very risk off and you're not interested in taking risks, what you do is this is huge. This sim triangle is massive, guys. So what you wait for it to break through, you wait for it to bounce down, and then you wait for it to bounce up. And that's called the sim triangle breakout, turning resistance into support. And that's a confluence, that is a confirmation for likely continued bullish action. Likely meaning you have confidence that the odds are better than worse for the price to continue to go up because you have resistance, flip, support. Now bear in mind you could also go down to the previous resistance, which is, here's the price. You're talking about 24% to the downside as a previous support. So there's a lot of potential for it's nothing good. So if here's an interesting play also, instead of playing the upside, the breakout, you could also play down here. Let's zoom in a little bit so I get a little more granularity on the drawing. Zoom in. Is it too much? Let's go to 1 hour. All right. So you could also one more. Sorry, guys. So slow. Okay. Okay, that's not going to work. Oh, let's get rid of that. Oh, sorry. Oh, there you go. Let's go to the 4 hour so I got a little more. So if you want, you get in on a bounce off of support, and then you set a stop loss just below. So you wait for it to go down to the red line, and then you're in here and it goes up. But if it goes down, you can lose 5% of your money, and that's how you protect your money if there's a breakdown, because there's a very large trend formation. If it breaks down, it's going to break down. And if it breaks up, you can sell 30%, 20%, or 8% of it when you get to resistance, because maybe it falls down. But you keep a bag just in case it keeps going up. And that's how you play a chart like this. I mean, frankly, I'm not a fan of just buying. You gotta be really picky, and that's probably I'll end the stream on that. Be picky, picky, picky. Picky to buy, quick to sell. You sell quick if you're out. If it's going up, you take profits 1, 2, 3, 4, 5%. And when things are hot, those 1, 2, 3, 4, 5% accumulate really quick. And over the course of March, April, May, June, July, August, there was massive gains to be had by selling 1, 2, 3, 4, 5% on the rips to the upside. Absolutely incredible. All right, ladies and gentlemen, Friday. It was a wonderful week. Thank you, everyone, for joining me. We hit on a lot of topics this week, and I hope we're making the best decisions possible, and that's why we're here, to talk about them, to see if we can win. The goal is to win. The game is there to be won. So that's why we're here. Thank you for joining me. October 2nd, I will see you all after a nice weekend. Remember, chill out, spend time with the family, relax, and I'll catch you on the flip side on a Monday. Y'all have a good weekend now. Peace.